2% decrease compared to the 1556 crore profit achieved in the same quarter of the previous fiscal year. No increase whatsoever in profitability. 23% decline in vehicle sales. Discover is over. Pulsar is fading. Honda, TVS, and Suzuki are closing in. What is happening to Bajaj Auto? Hi, and welcome to the Atul Mishra Show. I don't know what to call this show, a podcast show or just a special longish video session. Whatever it is, I am going to stay fully focused and fully committed to it. And in today's episode, we dive very deep to understand how low and how deep has Bajaj actually sunk, and can it stage a comeback? Music, please. Bajaj Auto's financial performance in the third quarter of the current fiscal year presents a complex picture. While the company announced a net profit of 1,214 crore, this figure represents a significant 22% decrease compared to the 1556 crore profit achieved in the same quarter of the previous fiscal year. This decline in profit, despite being reported as a net gain, underscores a challenging period for the company. The revenue from operations exhibited a marginal increase, rising by 1.25% to 9022 crore for the quarter ending December 31st, 2021, compared to 8910 crore in the corresponding quarter of the previous year. This slight growth in revenue, however, did not translate into an actual increase in profitability. The contrast between the marginal revenue growth and the substantial profit decrease highlights the pressures Bajaj Auto faced in maintaining its profitability. Further, underscoring the company's financial situation is the reported surplus cash and cash equivalents. As of December 31st, 2021, these stood at 17,883 crore, up from 17,526 crore as of September 30, 2021. This increase in liquid assets, while definitely indicative of the company's health, also suggests potential underutilization of available capital for growth or investment opportunities. The total sales during the October-December 2021 quarter were reported at 1.18 million units. This figure, when contextualized with the broader domestic motorcycle market, which saw a 23% decline over the same quarter in the previous fiscal year, points to a challenging market environment. Bajaj Auto's profit decline in this context reflects broader industry trends and possibly internal inefficiencies or increased costs that have impacted its bottom line. Bajaj Auto, a long standing Indian two and three wheeler manufacturer, has experienced significant shifts in its business strategy and market positions over the past decades. Initially, a dominant scooter manufacturer with its popular brand Chetak and Super, Bajaj became synonymous with scooters in India. However, the entry of Hero Honda in 1984 and Honda Motorcycles and Scooters India, or HMSI, in 2001, with their motorcycle and modern gearless scooter offerings, respectively, began to erode Bajaj's market share. Bajaj's response was delayed, and its subsequent foray into motorcycles, though partly successful, could not compensate for the lost opportunity in the scooter segment. Bajaj's strategic decision to exit the scooter market in favor of motorcycles, despite its strong scooter brand image, proved costly. The company had to undergo a significant transformation involving heavy investments in new manufacturing and R&D retraining of dealers, and extensive marketing efforts. This move coincided with a rising popularity of gearless scooters or scooties, a segment where Bajaj's absence allowed Honda to gain a significant market share. In the motorcycle segment, Bajaj's journey began in 1986 with the KB100, followed by several successful models like the Boxer CT100, Caliber, and the highly popular Pulsar range. Bajaj also entered into a partnership with KTM, further diversifying its motorcycle offerings. Despite these successes, Bajaj faced challenges across different motorcycle segments, losing market share in both the domestic and export markets, particularly in the 110 to 125cc and 125 to 150cc categories due to brand dilution and internal competition among its various models. In the premium bike segment, Bajaj maintained a strong presence with the ever dependable Pulsar and Avenger models, though competition remained intense. The company's exports showed more promise, particularly in Africa, with models like Boxer and CT100. A notable strategic shift occurred in 2011 when Bajaj decided to remove its family name from products, aiming for a house of brands approach. This move, intended to reduce confusion, led to brand overlaps and cannibalization, contributing to a decline in market share. The Indian domestic motorcycle market had taken a massive jump in 2011 when sales reaching a record 10.47 million units in FY14, marking a 2.75% increase since FY10. However, the mood in Bajaj Auto HQ was glum. The performance in this expanding market presented a contrasting picture. Despite the overall market growth, Bajaj actually saw a decline in its market share, dropping from a peak of 26.80% to 20%. A key factor contributed to this decline: the underperformance of Bajaj's Discover brand in the sub 125cc segment. Bajaj's strategy of overextending the Discover line, a fading brand, backfired, especially in the face of aggressive competition and new product launches by other companies. In contrast to its domestic challenges, Bajaj's performance in exports was robust. The company had played a significant role in driving the growth of Indian motorcycle exports, with its own export volume increasing by 82.5% over 5 years. The increasing importance of exports to Bajaj's revenue was notable. Export contributions to total income had risen from 28.2% in FY10 to 41.6% in FY14. This shift had resulted in a 151% increase in export revenues, far outpacing the 38.39% growth in domestic earnings. Had this trend continued, Bajaj's export earnings would have surpassed its domestic income. But that did not happen. Bajaj's export performance has been volatile and often loss making over the last 5 fiscals. The company's motorcycle exports have fluctuated between 1.23 million and 1.52 million units, while net revenues have ranged from 9381 rupees crore to 12134 rupees crores. Profits have been even more volatile, with the company reporting losses in 2 of the 5 fiscals. Bajaj's export performance mirrors its domestic performance now, characterized by volatility and profitability challenges. The company's export earnings have not consistently surpassed its domestic income. While there have been periods of growth, these have been offset by periods of massive decline. Bajaj's export business is likely to remain volatile in the near future as the company faces the same challenge as its domestic business. Over the years, Bajaj Auto's dominance in motorcycle exports has been increasingly challenged by other competitor brands, as indicated by the sales and revenue data from fiscal year 16-17 to fiscal year 2021. In fiscal year 16-17, Bajaj recorded domestic sale of 5.07 million units and export of 0.19 million units, generating a total revenue of rupees 30,000 crore, of which 1042 crore came from exports. This period saw Hero MotoCorp, Honda Motorcycles and Scooter India, TVS Motor Company, and Suzuki Motorcycles India Private Limited trailing behind in export volumes, but gradually increasing their presence in the export market. By 1718, Bajaj's export sales saw a slight increase to 0.21 million units with a total revenue of 30,961 crore rupees. Competitors like Hero MotoCorp and TVS Motor Company were closing the gap, with Hero's export sales reaching 0.28 million units and TVS's at 0.25 million units. In FY 18-19, Bajaj's export sales marginally increased to 0.22 million units, but its total revenue decreased to 30,600 rupee crore. The competitors continue to inch closer, with Hero MotoCorp and TVS both recording steady growth in their export sales and revenues. The gap narrowed further in 1920. Bajaj's export sales dropped to 0.19 million units and its total revenue shrunk to 27,037 crore rupees. Hero MotoCorp and TVS maintained their export growth trajectory, signaling a more competitive export market. By 2021, Bajaj's domestic sales had declined to 4.03 million units, although its export sales slightly increased to 0.21 million units. The data shows a clear trend. While Bajaj has historically been a leader in motorcycle exports, other brands like Hero MotoCorp, Honda, TVS, and Suzuki have been catching up, eroding Bajaj's near monopoly in this sector and intensifying competition in the global market. A comparison with Hero MotoCorp, the largest player in the Indian two-wheeler market, reveals further insights. In FY14, Hero sold around 6.24 million units, including scooters, while Bajaj sold 3.42 million motorcycles, about 54.79% of Hero's total volume. The fiscal year from 1617 to 2021 marked a period of fluctuation in performance for the motorcycle industry, as reflected in the sales, revenue, and profit data. 1617, the industry sold 5.07 million motorcycles, generating net revenues of 24,727 crore. However, this year saw a decline in profits by 15.4%, resulting in a total profit of 1,424 crore. The following fiscal year, that is 1718, showed a slight increase in motorcycle sales, reaching 5.18 million units. The net revenues also rose to 27,094 crore, indicating a positive trend in sales performance. Despite this increasing sales and revenue, profits nearly stagnated, dropping marginally by 0.4% to 1418 crore. The trend shifted positively in 1819 with motorcycle sales marginally decreasing to 5.16 million units, but with a significant rise in net revenues to 28,904 crores. This fiscal year was particularly successful in terms of profitability, as profits increased substantially by 22.2%, amounting to 1,732 crore. However, FY 1920 saw a downturn in both sales and financial performance. Motorcycle sales dropped to 4.53 million units, and net revenues decreased to 27,477 crore. Profits also declined by 11.4%, resulting in 1,533 crore. This decline continued into 2021, a challenging year where motorcycle sales further decreased to 4.03 million units and net revenues fell to 23,411 crore. Profits took a significant hit, dropping by 20.8% to 1,218 crore. This decline continued into FY 2021, a challenging year where motorcycle sales further decreased to 4.03 million units and net revenues fell to. This decline continued into FY 2021, a challenging year where motorcycle sales further decreased to 4.03 million units and net revenues fell to 23,411 crore. Profits took a significant hit, dropping by 20.8% to 1,214 crore. The decline in Bajaj Auto's market performance, particularly in motorcycle exports reflects a series of strategic missteps and an inability to adapt to evolving market dynamics. The company's initial stronghold in the motorcycle export market has been steadily compromised by increasing competition and changing consumer preferences. This scenario is alarming for Bajaj, similar to the cases of Kodak and Nokia, where a failure to innovate and evolve led to a significant market share loss and eventually downfall. Bajaj's decision to exit the scooter segment, historically its area of dominance, coinciding with the rise of gearless scooters, allowed competitors like Honda to fill the void. This move, coupled with an over reliance on a limited range of motorcycle models like Pulsar, led to a stagnation in product innovation. Such a strategy in a rapidly evolving global market has proven detrimental, as evidenced by the consistent decline in both domestic and export market shares. The financial data from FY 16-17 to FY 2021 paints a clear picture of Bajaj's challenges. Despite a promising start with substantial revenues and profits, the company faced a downward trajectory in sales and profitability, with other brands like Hero Motocorp, Honda, and TVS making significant inroads into markets previously dominated by Bajaj. To reverse this trend, Bajaj Auto must embrace innovation and diversify its product range to better align with the current market trends and consumer preferences. Additionally, re-evaluating and possibly revitalizing its management strategies would be crucial in regaining lost ground. Bajaj's future success will depend on its ability to adapt, innovate, and effectively respond to the increasingly competitive and dynamic global motorcycle market. How did you like the episode? If you liked it, please hit the like button. If you think others should also know about it, please hit share. And if you think we need to hear something from you, either your praise or your criticism, the comment box is open for you.